Good day, everybody. This is Judd at White Wave Trading Strategies. I just wanted to review our current trade setup from a couple of weeks ago. That's followed through, and it's been a brilliant trade for the room. And pretty much everybody that's following me. A couple of weeks ago, let me get to this chart. We started writing that the Nasdaq was starting to trade like it did in 2000 before it cracked. And how do I know that? Is because I had a group in the Nasdaq and I personally bought the first 100-point break off the high and turned around and immediately pitched it. So I have a little experience in that. Most of you know that I have a price template that I use, that I create every quarter. And I had a price target of 20,995. And the range started at 20,949. So I knew somewhere between 20,949 and 21K, just shy of 21,000, that was the highest probability of price rejection. And that's what I was looking for a short, or at least a pressure relief short. Did not want to be long the currency, the indices, and I'd been talking about it for about a week, that it was just a grind up. And if you wanted to be long, you just bought them during the day. You stayed with it and you didn't trade it, because otherwise you didn't make any money. Now, the important thing to note is that the S&Ps hit my target first, but it was really the target in the Nasdaq, which has been running all the indices, that needed to go to its price target in order for the market to back off. And that's exactly what we saw on the Thursday number on the 11th. You had a spike early in the morning, and that just started it. And the first break was 150 handles right away. And then I came in and said, well, there's a minimum of another 200 today. And it just kept on going. So this is one of these, you sell before you buy, and you trail up your stops, and you can catch a big move. Now it stabilized for a couple of days, came back up on the 15th and retested its breakdown level. Retested it a couple of times and just massively rejected it. And then it failed on another Wednesday and started coming down. This is the hallmark of a market trying to change direction. Now you can see it, the pit Nasdaq, the US session, closed on its highs on a Wednesday. The all session went up and traded the price target before the US Open, before 8:30 in the morning. Then went up there at 7:30 in the morning Chicago time. By 8:30 Chicago time, it was already 90 points off its high and going down. The other thing was that on Wednesday, this last Wednesday, we told everybody to take their money and go. This high was within $10 of a 4-year price target in the gold. When you get to targets like that, you just don't want to fool around with it. Now you can see tonight there's a little bit of a bounce. I mean, that was a pretty good area for it to stop. Same with the silver. The silver has to make new lows. The silver has to get back below, $29 to break. And if it does, it'll probably break $2. But in the meantime, everything's holding. So trade the price and trade the market in front of you. Trade the price action that you see. And a white wave, with the amount of experience that's in the room, you know, we're generally on top of it. Now here's the S&Ps. This is the US session S&Ps. That was Tuesday. Wednesday, here was the first one. That was the first day we were looking for that high on June 11th when the Nasdaq top came down, had a really nice break. The morning it came back and started going back up. This was mainly off S&P Russell and Nasdaq Russell spreads that the S&Ps were going up. And we told everybody not to chase this. Wednesday it gapped lower and it went lower. Now I still think the S&Ps go down into here before this is all over, and I've got another couple of weeks for that to happen. So that's what we've been up to in the room, and if you'd like to join, it's easy enough. Go to whitewavetradingstrategies.com, put your name and your email in, and come and join us for a month and see what you've been, not seeing in a 5-minute chart. That's all for tonight. Thank you very much.